to feel the commitment. I want to feel the excitement of everything that we're talking about today. So we'll do it one more time. Let's give it 100, yes? Good morning, everyone. Much better. You're all welcome to day 2 of the Global AI Summit on Africa. My name is Fiona Mothoni. I'll be leading you throughout today. And before we move forward, I want us to take a moment to reflect on some of the amazing conversations we had yesterday, from the powerful insights that were shared by the heads of states who are with us, to industry leaders, as well as the enthusiasm that was carried out throughout all sessions of yesterday. One thing is clear: Africa is ready to take action, and we're already walking the talk. Yesterday, we explored how AI is already shaping critical sectors across the continent. We had a tailored session on specific sectors. We looked at agriculture, health, and we even had a dedicated session on youth. That's because we want to ensure that AI development in Africa is both inclusive as well as impactful. And that is the main reason why this summit is really important. It is setting the stage for bold ideas, setting the stage for transformative solutions that will drive inclusive and resilient growth within the continent. The first session that we're going to have this morning, I am very excited about it, mainly because it is a session that will make everything that we're talking about a reality. How do we finance this transition? How do we get investments into this? We have an incredible group of panelists who are going to really be sharing, and one of the key things they will be highlighting on is the need for collaboration. And each and every one of us here in the room really has a role to play. So as I invite our panelists here to the stage, I want you to escort them with a warm round of applause and escort them all the way until they take their seats. I'm going to start with our first panelist, Sarah Marker, Africa Executive Director at One. Let's welcome her with a warm round of applause. You're welcome. Up next, we have Dr. Donald Kaberuka, Managing Partner and Chairman of the Board of Directors, Southbridge. A very warm welcome, Dr. Kaberuka. We're very delighted to have you here with us. You're welcome, you're welcome. We have Dr. Vera Songwe, Founder and Chair of Liquidity and Sustainability Facility. Let's welcome her with a warm round of applause. You're welcome. We also have Honorable Tesi Rusagara, State Minister, Resource Mobilization and Public Investment, Rwanda. Let's escort her with a round of applause. You're very welcome, Honorable Tesi. We're delighted to have you with us. We have Chido Munyati, Head of Africa at the World Economic Forum. Let's give him a round of applause as well. And our amazing moderator for this session, Magdi Amin, Managing Partner, Africa Renaissance Ventures. You're welcome. Over to you, Magdi.
Thank you. Muara Mutse. Good morning, everybody. Yeah, let's bring some energy here. This is a very important conversation, as we said, a great panel. I'm really honored and delighted to be here in Rwanda, sort of my second home lately. And the issue here is that we have the opportunity to realize the estimated 3 trillion additional GDP for Africa if we can harness artificial intelligence and reap the benefits through productivity gains, efficiency gains, expanded markets. But that 3 trillion by 2030, by some estimates, cannot be realized unless we mobilize the financing for it. We're talking about financing for expanding infrastructure and compute, the innovations that we saw outside in the startup gallery, the actual models that are relevant, the data sets that are relevant to Africa, that reflect local culture, knowledge, and realities. And of course, the talent, the deep bench of scientists, practitioners, engineers required to truly harness artificial intelligence across all sectors. This is a general purpose technology that can have impacts across government, agriculture, education, healthcare. So we really need to mobilize these resources. So this panel is really all about that. And we had a high-level roundtable last night, a sort of a select group of people to provide some inputs, and there was strong endorsement behind the idea of establishing an AI fund. Needs to be fleshed out, but we got great inputs on the contours of what that might look like, and great energy and willingness to participate. So let me start the discussion with asking more or less a general question. Unprecedented levels of financing, but from your vantage point, what is the single most critical factor or innovation required to unlock that capital for AI infrastructure? And let me start with Minister Tessie, who's not only a great state minister, but as I understand it, spent quite a long time in Silicon Valley getting her education, so much appreciated. She's ready for this topic. Over to you, State Minister.
Thank you, Magdi. First of all, I want to thank everyone for honoring this invite to the summit, and we hope you'll get out of the hotel and spend some time to visit Rwanda or visit Kigali while you're here. So jumping to your question in terms of where do we start? First, we need, and it's good to see all the different leaders gathered here, we need the will to be able to do it. We need to know where we start with our investments. We need to recognize that AI is critical infrastructure, not just for tomorrow, but even today. And so once we have the will, then I think that will kickstart everything else. When many years ago, in Rwanda's case, when we were starting our digital transformation journey, one of the decisions that had to be made was every time we build a road, we need to leave space for fiber. Instead, and that was early on, even before we knew when the fiber was coming, and then we later on invested in it. So I think we need to have such conviction about AI and about the innovation that's required and the investment that's required, and then that will trickle down to how we then allocate the resources that are required to be able to deliver on this. One thing in particular, I think as we're all standing here, the applications, the platforms that we're talking about will require us to make the investments in infrastructure. We need to have the right energy, we need to have the right data centers, and we need to be able to do that with the private sector. There's only so much government can do. And we need to make the commitment now as to how we will do that. And I think that includes finding ways to de-risk it for the private sector so that it's not as costly if they're able to do it on their own. So whether that's co-investing or leveraging the concessional capital that we have as government and dedicating some of that to build out the infrastructure, those will have to be some of the bets that we make so that as we build the infrastructure, it's also accessible for those who do it, and it also crowds in the private sector to be able to do it. But I truly believe that investing in AI it has to be governments to lead first, just given the capital that's required, especially the upfront costs. And we then have to make the decisions around how we allocate our capital to power that infrastructure that's required. So, pause here for now.
Very well put. So I certainly relate to the idea that we need conviction. And once we have conviction, then we line up resources across the public and private sector, using the public sector to leverage and scale. And we'll get to that in a second. Vera, you've launched your own very ambitious initiative and managed to get some resources, to move forward in Africa. And now so how do you take the lessons that you've learned, both heading UNECA and the World Bank and many other important stages of your career, focus that on AI. What are the lessons, the critical things that we need to do to move forward on this agenda?
Thank you, Magdi. Good morning, everybody. Let me start by saying it's always a pleasure to be back in Kigali and in Rwanda, and to be on the panel with such a distinguished membership with Mon Président, like I always say, here with us. listen, I think three things. In one of the reasons I'm here is while we're at UNECA, and I think I see Maktar Sek in the background there, but when we were at UNECA and there was COVID, when we were trying to understand where the COVID was spreading and how it was spreading, we tried to sort of get a data set together, and we couldn't get the data set. We couldn't get anybody to sort of crunch those numbers for us. And we finally ended up in Dubai, and we were told to pay $1 million for, every month to be able to do this. We're sort of a UN institution. We didn't have those kinds of resources. And so we sat down and we decided to create an AI center. And so we created the first African AI research center in Congo, Brazzaville. And we got, to your question in terms of infrastructure, we were able to get then sort of the first supercomputing computers into that university, thanks to the generosity of the president. He gave us a whole wing on the university, and that is now growing. And essentially, I think this is where when you talk about partnerships, Minister, we're able to then bring partnerships together and hoping that, big shipping industry can begin to use that center to do research to help them manage their movements. But I think it tells us two stories. The first one is there has to be a will. There has to be leadership. Leadership in this case, for example, there was a leader there who was able to say, I'm going to give you the university, I'm going to give you the space, let's go ahead and do it. We had partners, private sector partners that said, we will give you some of the first high-speed supercomputers out of South Africa that came onto the continent went there. So we were able to do that. Now it's the funding. And yes, I'm now sort of trying to figure out how we do funding for the continent. I think there are resources out there. And one of the new sort of, there's a number of different resources that one can do. We've seen sovereign wealth funds. There's a lot of sovereign wealth funds on the continent. Rather than maybe every sovereign wealth fund trying to fund AI in their economy, we have the African Continental Free Trade Area Agreement. I never sort of miss a bit to talk about it. But maybe we can mutualize some of the sovereign wealth fund resources and create one center and then build out of that. What we need today are those high-speed supercomputers. Of course, Strive was here yesterday and is here today. And we know that he's now partnered with NVIDIA to do the first 100 or 3,000 GPUs on the continent. Yep. It's amazing, and that's solid. What we now need is, now that we have the GPUs from Strive, we need the cloud computing. We need people to begin to design and write those models for us. And so some of the infrastructure is human infrastructure. We need, Zindis of the world. We need many more Zindis that have the engineers that can do the design. And a lot of times when we talk about infrastructure, we forget that we need also to fund the knowledge, the human capital, and the capacity to actually drive and power those machines. I think one of the biggest conversations today in AI is that the AI is programmed by humans, and so essentially it responds to human reactions. And so if all the programming is being done out of our continent, we will ask questions and it will give us answers that are not necessarily unique to our environment. So we need that. There are three kinds of funding. You have the sovereign wealth funds. We have what we call development impact bonds. Development impact bonds are bonds where the yield fluctuates with the impact and with the result. Right. There's more and more of that happening. Singapore is doing it. We also see right now with NVIDIA tokenization, right? NVIDIA has just gotten into a partnership with BlackRock. They've launched a $15 billion fund with Elon Musk actually as well, to be able to understand how one can use tokenized assets to fund AI. But I think the message there is that we have to be realistic with the funds. We have to start somewhere and then build. I think sometimes when we have too big ambitions, we get disappointed very quickly. We're getting into probably a global slowdown. There is not going to be 100 billion there for Africa AI. But if we can at least start with 10 billion that we then leverage and drag in and pull in partnerships, I think we can go a very long way with that.
Okay, excellent. So lots of messages there. We agree. It's a whole ecosystem. You can't develop one part of it, the compute, and not have the application layer or the talent or the utilization of AI. So I agree, making sure that we're building all of it, all of the pieces, and scaling from success. So, Dr. Kabaruka, you've worn many hats as a minister, head of African Development Bank, now in the private sector. You have a really comprehensive view of this issue. So what's the critical success factor? We've heard commitment, conviction, leadership, being comprehensive, scaling the private sector. In your view, what's critical?
Thank you very much. Good morning. 2 weeks ago, I was in China, and I spent a day in Shenzhen. This is on the southern coast of China. And we were visiting the world's largest manufacturer of electric vehicles. They're called BYD. I mean, what is happening in that place is astounding. And I think it will change the world. We saw things I never imagined, honestly, that I would ever see. Some of them are not yet in the marketplace. So. But then as we were talking to people there, maybe this may sound anodyne. Someone said to me that China is producing now annually anywhere between 1 million and 1.4 million engineers a year. Engineers, all kinds of engineers. To give you an idea, the United States, I hope my numbers are right, it is less than 100,000 engineers per year, the United States. So is it surprising that 20 years ago, Chinese share of the global manufacturing output was, I think, about 9%. Now it is 33%. That is the same as the next 3 countries put together, the US, Japan, and Germany. All right? And when you look at it, it has taken a combination of things, the kind which my colleagues are mentioning. And if I was to be candid, I don't think to fund AI, what is in short supply is capital. What is in short supply is intermediation of that capital. Okay. And I say this because I believe that international organizations will have to shift the way they have worked since 60 years ago. The lack of the institution I was leading, I don't know if there's someone from ADB here or World Bank.
Yes.
Because for the last 60 years, our institutions have functioned as transferring a bit of surplus capital to fight poverty, to build roads, water points here and there. That model, I have nothing against it, but it's coming to an end. These institutions will have now to shift to a model of how they intermediate where you have got surplus capital, but because of demographics, you have aging, low returns on investment, to places like Africa and the ASEAN countries where you have demographics coming up, and the return on investment are very high. Let me explain. So if you take, say, Europe, most of Asia now, essentially savings are increasing at a very high rate. Savings are increasing because the demographics are down. In Japan, even if you put interest rate at -2, does not increase consumption. They tried that. Now the lack of Singapore, Taiwan, even China, they are approaching this issue of demographics. So savings are increasing, and the return on investment is limited, except one area, technology. Now, in our case, what you call the Global South is the opposite problem.
Yeah.
We have demographics coming up, and will be there for many more years. Savings are negative, for reasons you understand, but the return on investment is very high. So, but because of perception of risk, there's no mechanism to intermediate the surplus capital from that part of the world where the return on investment is very low, except in technology, to that part of the world where the opposite could happen. So I think I agree with everything that has been said, private capital, governments. But I think for me the defining element will be if we find international organizations, if they change their business model now to do what I'm saying to you, i.e., how do you de-risk the capital from the north, the global north, where the return on investments are very low, where savings are increasing every year, to places like Africa where the returns will be very high, and one of the areas where it will be very high to be this new technology, including AI. Now, are these institutions prepared to do that? I don't know. Maybe Vera was in the World Bank for a long time, same time as me. I'm not sure if they're prepared to do that. But if they are not, they will be missing a huge opportunity, and they'll become very irrelevant. So I do think that the shareholders of these institutions have to sit back and ask, what does this new industrial revolution mean for their business model? Because then, together, between themselves, the sovereign wealth funds, all these institutional investors in the north, with opportunities in the south, I think there is a win-win for everyone. My last point. You see, the first industrial revolution, which was going to mass production, was funded by surpluses from the agricultural revolution.
Yeah.
You know, agriculture was changing, so it released labor, surpluses. This what funded this revolution. This one will have to be funded by surpluses of savings from the global north to the global south. It's a point I was making.
Yes.
Unfortunately, is there a will to have this done? My guess is it will happen. And the example I have is what has happened in the ASEAN region, and this to Vera's point. You see, the ASEAN region, which is now one of the most highly fast developing part of the world. I keep giving the example of Vietnam, which in 1994 had a GDP of $15 billion, 1.5.
Yeah.
Now it has a GDP of $500 billion in one generation.
Yeah. True.
Do you know what has happened? They invested massively in education. I keep referring to an article I saw in The Economist. You can look it up. It's in June in 2023. It is entitled, "Why Are Vietnamese Schools So Good?" They were saying that learning outcomes in Vietnam are better than Canada or the UK. So this investment in education, all right, plus a few other things which I mentioned, then attracted huge amounts of investment from places like Taiwan, South Korea, China, and Japan. So the chance is if you have a Samsung phone in your hand, the chance 60% was made in Vietnam because Samsung relocated all its production to that area. Now, that part was investment in education, and then the free trade area, which 30 years ago, the region signed with China. So investment have been flowing forth and back. So I think a combination of international organizations, willing to do intermediation, take the risk. Number two, our own investment in the education is learning outcomes.
Right.
Taking advantage of the continental free trade area is what will get us there. It won't be easy, but this is what I think will happen.
Okay. Very sensible and grounded in experience. You could see why you're always asked to lead these institutions. The ASEAN example is great. I also worked there in 2000 to 2005 or 6, and they now have an ASEAN fund, but ASEAN states and resources led that fund. So actually, I know we're kind of moving off of questions I prepared, but I just prompted by what you said. Your model was about international capital, including the World Bank and others, and they are here and certainly participating. But what about African capital? What about our sovereign wealth? What about our institutions, our insurance and other long-term capital providers? Given the misperception of risk, which I certainly agree with, they're in the best position to really understand the opportunity. What is the role? Do you see that role? Maybe also just extend this to Vera and then Chido as well. So you really focus on public-private partnerships, and so you've seen this around the world at the World Economic Forum. Maybe let's go around and ask, first of all, let's get Vera's perspective on African capital, and then Chido as well.
There is a lot of African capital, and it is being deployed. I think the question is how quickly and at what scale. Okay. Today, what we see is, we just wrote a report on national development banks, and to President Kabaroka's point on what you can actually do at the local level, national development banks de-risk. So you take away all of that sort of perception of risk, because essentially today, the Brazilian National Development Bank, BNDES, is the largest funder in the world of renewable energy projects. It's a national development bank. It funds in local currency, so has no FX risk, understands its environment. Project preparation is de-risk because it's in the budget with the government. And I think we can do that. Nigeria, of course, with its sovereign wealth fund, is already doing a lot of that. Yep. Kenya is beginning, Ghana has one. But if we can mutualize those, I think it will be quite important. The other thing is this new instruments, and I'm in the business of new instruments. And what we see is we're about to launch a new financial instrument to provide liquidity to the continent. It gives you a 16% return. We're so used to today talking on the continent about de-risking and the perception and the negative, sure. But we have paper that returns 16%. It is, we're talking to the Gulf countries, it is very attractive. We have the largest Gulf sovereign wealth fund invested. It's not public-private partnerships, it's private investment that is delivering a return. So I think sometimes when we talk about the continent, we're at a rush to say there is riskless perception, you're not going to make the returns that you need. But it is actually not always correct. And the final point that I'm going to say is I mentioned development impact bonds. Education, as President Kabaroka said and the minister, is about a 20, 30-year process if you're going to educate a kid all the way until they become the Vietnamese engineer. So we need long-term capital. That's one of the things that we're also trying to do. If countries are going to start investing in engineers, they need to borrow today and be able to pay back in 30 years when that engineer now has a job and can actually begin to pay back. And one of the things that development institutions must do is start lending 20, 30-year or 30, 40-year capital, because it's only after 40 years that social investment begins to pay a return. So if you're borrowing for 10 years to get a return on education, you will never get it. But education is the most profitable business that we can do, and maybe, again, mutualizing those investments in engineers across the African continent will deliver much higher returns.
Excellent. Chido, your perspective.
No, thank you so much, Magdi. I mean, looking at a different perspective and approaching this issue from a first principles perspective, I think one of the foundational levers that is critical to realizing this potential for the amount of money that we're discussing here, about $60 billion, is to look at energy infrastructure. So currently on the continent, 43% of people have access to about reliable electricity. But in most countries, even where electricity is available, is characterized by periodic power cuts. So that makes it very difficult for us to adopt and scale these advanced emerging technologies. Take AI infrastructure, for example. To build and run these energy-intensive components, so high-performance computer clusters, next-generation networks, as well as data centers, it's not just going to require more electricity. It's going to require exponential electricity, energy systems that grow fast enough to meet this energy demand. An example of this is generative AI, which I think estimates say that it already requires about 33% more electricity than traditional software. So this tells us two things. The first thing is that the energy demand for these exponential technologies is not linear, it's exponential. And secondly, if we don't come together, both as the public and the private sectors, to quickly scale our electricity infrastructure, it's not likely that we're going to realize the potential of realizing intelligent economies. And what will result is an over-indexing of these investments. So in South Africa, Rwanda, Kenya, for example, and the rest of the continent will be left out. And finally, to sort of put a fine point on this, it's going to require about $400 billion in investment by 2050 across both traditional and renewable sources of energy to meet our current demand. And so this is what it's really going to take to sort of bridge that infrastructure gap, as well as creating the backbone and the foundation for this technology future that we're discussing.
Yeah, you'd like to jump in, please?
Yes, I'd like to jump in because I do think there is a role for our domestic private sector. The authors of our MDB reform are sitting on this panel, and MDBs provide the concessional funding for African countries. And the one data shows that Africa pays 500% more in interest rate, talking about the cost of capital, when they go into the bond market than if they borrow money from non-concessional sources. And MDBs can unlock up to $1 trillion for this development push. But when we look at pension funds on the continent, they're sitting on a lot more trillions in assets under investment. Their long-term investments, clearly they want safe instruments. But I think there's a role that we can play to unlock how pension funds can engage in AI now, because there's the tenure opportunity and the safety that they're looking for. And that's where government intentionality really comes to play. Because I think the one thing we need, we've seen this in Congo-Brazzaville with the AI Center, we're seeing it in Rwanda with the leadership of the government. If the government has the intentionality, then we can create that environment where we can do the intermediation, as Dr. Kaberuka has mentioned. We can see where the sources of funds are, and we see where the needs are, and do that matching, and use policy reform to do that.
Really, really appreciate the emphasis on policy reform and the role of the state in unlocking that intentionality. So it comes back to Minister Tessie's original points. I like that. And I just wanted to come back to this energy question that Chido raised. So there's been a very interesting moment in AI this year, whereas last year was all about sort of an arms race as to who could amass the biggest data centers, the best GPU chips, which you're right, require very specialized infrastructure, energy, cooling, and others. But there was a transformation where what we saw out of DeepSeek, and particularly open models, was a shift toward efficiency. And I think that's something that Africa needs to leverage, because it's for different reasons, not necessarily constrained in access to the chips, although we will be, but really constraint on energy. So we also need to continue to refine and drive toward more efficient models, both in training, fine-tuning, and inference. So I think that's a really important point, but we can attack it different ways. Let me then double down on your very key point. If you're talking about long-term capital and a return on capital, it's exactly what Dr. Kaberuka said. The demographic dividend says you really have to focus on Africa if you have a long-term view. And it requires the state to be intentional. So let's go back to Tessie. It's all on you. I mean, no pressure, but.
Thank you. And to your point on efficiency, there's another angle of efficiency. I think we're talking about returns. We also know that many of us have small economies, right? And so there also needs to be efficiency in how we invest that capital. And when we keep localizing, there's only so much, some of this infrastructure can't be localized if you want the scale and efficiency that we're talking about. So how do we not just pull the domestic finances? In our case, the sovereign funds invested in the infrastructure, but it's only in Rwandan infrastructure. How do we pull our sovereign funds, our domestic capital at regional levels to then invest in regional projects, if it's energy, if it's the data centers that we're talking about, and then we also get the scale that can take place. So I think there's the leadership at local level. There's the leadership that we also need to take at regional or Pan-African level in terms of how we invest. And to the point made by Dr. Kaberuka, I think that's where the international organizations can also help in terms of convening, even incentives around how we build that infrastructure today. So I think that's one point of efficiency. I think we take our responsibility very seriously as a government in terms of where we invest. In the talent piece, we're not just investing in Rwandan talent, we've chosen a Pan-African play. And that's why the institutions here are all Pan-African, and we're grooming African talent in Rwanda, but we know it's not enough. We know, given the scale of engineers that's required, it's not enough. So we need to do more here, but we need to do more even just at a continental level, and not just think local. I think the conversation needs to be elevated to a continental level. If you look at the other, everyone who's scaling has either a big economy or it's places like Singapore which are taking advantage of regional ecosystems so they can thrive. So I think Africa will have to do that if we want to be efficient with our capital and if we want to get the impact that we want and to build the talent at scale to be able to compete at a global level.
I just don't want people to just sort of gloss over the point of Rwanda deciding from day one to be Pan-African and to have students from across the continent come here, the institutions that are Pan-African come here. I'm from Sudan. A lot of people affected by the conflict there have come here and continued their education and work. I really appreciate that. It's a super important point, and it's something that we all need. And when we're talking about in this panel, most of your interventions across the panel have talked about win-win and talked about partnership. And that's such a great example. I know we don't have too much time. I believe there might be an announcement coming, so they've asked us to maybe move forward a little bit. But before we leave, I really want us to move from the concepts that you've shared and the key points around leadership, around partnership, around mobilizing long-term capital, leveraging our demographic dividend. I think the statistic I saw is that we'll add 400 million or so workers over the next 20 years, whereas I think China will lose 200 million. And I think Europe is already in some ways very deep down the process of that sort of phase of demographic dividend. So it's a super important point. We need to be the engine, the driver of productivity and economic growth for the world increasingly. And that requires us to have this technology. So let's come away with what commitment can we now make as wearing our respective institutional hats or as people. It's all about us, people. We have the choice. You have agency in this. It's not inevitable that we will be behind or ahead. It depends on what actions people in the room make when they walk away from this summit. Starting with you, Sarah.
Thank you. I think that when you look past at how AI has taken shape, I think it was 1956, Dartmouth College actually convened, academia has a role. So they convened people, and then the U.S. government took it as an investment hub, and that's how it grew, really. So as I think of the continent, where is our role for academia? We talked about, Dr. Kabariko talked about China, and as we look at the state of our universities and colleges, that's going to be the hub going forward. So a lot more attention needs to be placed on that hub. The second sort of idea that I would take forward is just the role of our domestic private sector. In this conference, we've heard international resources are good. We're seeing the disruption with ODA. I don't think philanthropy will be let off the hook with that disruption. So where's the domestic philanthropy? Where's the domestic private sector? And how do we use philanthropy as a catalytic instrument to attract more resources, de-risk more investments, create sort of philanthropy plus others? So there's a role, again, for the domestic philanthropy and the domestic private sector. And the regional idea that the Honorable Minister mentioned must be underscored. We can't do this alone. We can't do this even as sovereigns or national strategies. While those are good, we do need to work across the continent. And the CFTA will increasingly be an important tool to leverage our success in this new frontier. So I do think we need to double down and invest in that. Those will be my parting words.
Thank you. Thank you. Dr. Kabaruka?
Just three small points. Just before I left the African Development Bank, I tried this issue of mobilizing African capital. And so, because there are some things we could not do on our balance sheet because these institutions like to protect their AAA rating. So they're extremely risk averse. Now, some of the things we want to do around infrastructure, all kind of infrastructure, required some degree of risk taking. Yeah. And I could not do that on the balance sheet of the bank. So I tried to set up an institution. It still exists. It's called Africa 50 Infra. Yes. They're based in Casablanca. And I approached these African institutional investors and African governments. Could you pull a bit of our resources together so that we can have a facility to prepare projects and then co-fund them? I must be honest with you, I was not very successful. I was not very successful. The bank itself put in, I think, $500 million, if I recall. But all other national institutional investors I was approaching, they were extremely reluctant to co-invest. They were happy to invest in their countries. But if you ask them, could you pull resources together for Pan-African investment, the appetite was very low. So I did ask a question. So what exactly do you want? I know you want a good return, you want liquidity, you want safety. Suppose we could structure something which gives you all that. Right. Then I found for many of them, actually, even legally, I don't know if they changed, even legally, many of them could not invest outside their borders, except for a very limited amount, a small percentage. So that was issue number one. Can this be resolved? It can be resolved. I think here it has been resolved somehow. But some of the large countries in Africa with huge surpluses would invest with difficulties outside their geographies. So that's one. Second point I really wish to mention to this audience is this. You know, this demographic dividend assumes that you catch it at the right time, because it lasts for about 40, 50 years, okay? So Latin America missed it completely. Now, Asian countries grabbed it. So if we are, as African countries, we are to benefit from this dividend, it means as of now, we would be investing in learning outcomes in massive levels of human capital development, right, with a view to catch it. Because it lasts, it's like the way they teach it in business school is that the demographic dividend is like a python which has swallowed a big goat, all right? So thin here, big in the middle. Once you miss it, you have missed it. And so I do think that we need to move now, not simply to invest in numbers of people in schools and universities. It is the learning outcomes, what comes at the end. And also agree that because of AI, learning now will have to be a permanent process. Education is not something you pack into kids between age 6 and 24. It is permanent. So that kind of investment requires a shift in the way our governments think about education and training. And I want to end by saying that countries who have grabbed these opportunities have always done so on the basis of three things. Number one, stability. Our countries have to be stable. Our continent has to be stable. Stable in all the senses. Number two is about skilled population. And number three is about an empowered population. If you have those three, a skilled population, stable nations, empowered to innovate, to think about things afresh, I think we can grab this dividend. So the combination of technology and demography is in our horizon, but there are some things we have to do now, right, and that requires governments and private sector to think about differently. But thank you for inviting me.
Thank you so much. I don't think I heard the specific commitment, but maybe we'll come back to you on that. Since you left it open,
no.
We'll be specific.
I can't make commitment because I left the government a long time ago. So,
but you run Southbridge. You have capital.
No, she can make the commitment.
Okay. Let's not be risk averse.
To support us. Talent and infrastructure. I think we need to invest in it efficiently and productively. It can't continue to be local. We need to think beyond borders. And I think we want more countries to join us on this journey and in this mindset so that we can get to where we want to go as a continent. I don't think we can do it in small silos and succeed only if you work within your local context. So I think if we prioritize those two, we'll be able to take advantage. Even if we can't do it at scale today, even with what we have progressively, at least we'll kickstart when we start to see the benefits. So I think we're on the right track. We're just still playing at a small scale, and this is a rapidly evolving space that's moving very quickly with lots of capital, and we'll be left behind if we don't start making those investments today.
I think I heard a commitment. That sounds good to me. All right. Vera?
Three things maybe to follow up from what has been said. I think the first one is looking at where we already have pools of capital and trying to see whether we can organize them in a way that you can deploy. And so part of what I do is create these instruments. So I think one of the instruments now that we have, and we're working on our first one, is an ETF, but we're doing the first all-Africa ETF, which will be general. And so hopefully by the time we meet, we should be able to maybe also do an all-Africa AI ETF. And essentially that just pulls liquidity into investment. But something that we didn't talk about and is related to this is all of the MDB development of institutions funding is a third of our remittances. And so there is a diaspora out there that is sending billions and billions of resources onto the continent. But I don't think we have organized ourselves enough to channel those resources into the right things. And you can use AI to build houses. You can use AI for agriculture. You can use AI for education. The diaspora money is going to building houses, is going to education, is going to agriculture. If we work, again, collectively and at scale to see how we can pull those resources into that, I think we can do better. And so the other thing that we're trying to work on is to see how one can use blockchain to drive some of those investments into those areas. And so again, you use AI to do that. And I think building from the Chinese example, this is something China is doing very well, and we're looking at it and seeing if we can do it. And so if we're able to do it, I think that will also be able to help redirect, what is today, I think, of course, remittances are private capital, so the private sector has to decide what it wants to do with its resources. But part of the reason why we don't use our private capital well enough is our institutions are not designed to support how to do it. And maybe we can try to work in that vein to see how one can do it. And finally, it's on this education issue. We do need to start talking about the importance of education. Not just, I think when you say education and AI, people think it's so far, but to get to AI, we need to transform our minerals. We need to produce them and develop them on the continent. And we know that we can do AI if African minerals are not being mined, processed, and transformed. And so we also need engineers that can do that and do it well.
Thank you. You've brought in the question of the African diaspora. There's an African diaspora investment symposium coming up. I'm going to commit you to come giving a little bit of that talk and those ideas at that symposium. It's in May. But the diaspora plays a critical role both in remittances but also talent. You see a lot of the talent here in Africa. Many of them have had time abroad and will come back and build great companies. So diaspora is a great resource. We do need to leverage it. Chido, what's your closing thoughts and your commitment?
No, thank you, Magdi. So I think my closing commitment. So firstly, I agree with Sarah and Dr. Kabaruka that the AFCFTA presents immense potential to mobilize public-private resources by creating this cohesive, integrated market. So my big commitment from the World Economic Forum is that we're already doing the work under an initiative called the Forum Friends of the Africa Continental Free Trade Area. We've been mobilizing private companies at the highest point of leverage to really commit to strategies and deepening the industrial value system throughout the African continent. And ultimately, this will have the effect of unlocking the capital that we're discussing here today. A prime example already is the Digital Trade Protocol that was recently adopted, which already addresses some of those barriers and constraints to attracting resources into the continent, thereby enabling and creating, namely by addressing sort of fragmentation and some of the inconsistent regulatory framework across the continent.
Right.
And in short, this then sort of provides the environment for many of the VCs and AI companies in here to make investments across borders without having to deal with 54 different regulations and laws. So I think that's going to be our commitment from the forum.
Fantastic. Reform is so important. Yes,
I wanted to say that President Kaberuka's Africa 50 has worked really well, and it's funding the innovation city in Kigali. So I think, and data centers across the continent. So it's I think, and has brought together sovereign wealth funds to begin to fund. So I think it was difficult to start, as is everything, but it is now flying and it is doing well.
No, absolutely. Very good. Very good. No, Alain Obois is picked up picked up the mantle from you and really has taken it forward. So that's a great. When you hear with the innovator and the starter, there are lots of innovators and startups now. That founder's journey is not easy, as Dr. Kaberuka will attest, but you get there eventually. I think in terms of commitments, I will say, we invest in African startups, and I will commit to 75% of them leveraging AI and using our team to help them access the lessons and knowledge around the world on how best to use it more efficiently, and being some of the role models of how AI can help transform Africa. So we will invest on those startups at our level. So I think this is the close. There'll be, I believe, an announcement coming up. So I think we've used the time very well. I really appreciate the comprehensiveness, the sense of partnerships that's required, leveraging African capital as well as international capital, and the need that the demographic dividend is sort of, there's a factor there that's demographic that will take place no matter what, but the extent to which it's a dividend depends on us making the right human capital investments now. Excellent point. And the real key points on conviction and leverage and leadership of government, but at the same time doing so in a way that scales up the private sector and unlocks those sources of long-term capital. When the Africa AI ETF comes up, we should all invest in it. So let's do that. So thank you very much. Really appreciate your comments and thoughts.
Thank you so much to our incredible panelists and moderators. So much wealth of knowledge shared. If we could give them another round of applause. Amazing, amazing conversation. I think Magdi has summarized it very well. Financing Africa's AI ambitions, it's possible, but it's rather complex from the conversations that we've had by the panelists. It needs tailored, it needs strategic, and it also needs a bold approach, one that really reflects the unique challenges, the unique opportunities, and ambitions for the continent. It has been suggested that we must explore every possible avenue, from efficiency in public funding to private investments, strategic partnerships as well. And to the point that was raised by Dr. Donald Kaberuka, we need to have tough conversations on de-risking global capital from the global north, and a shift in how we approach education, to look at it as something that is long-term. Also, Dr. Vera mentioned the need to tap into innovative financing models. The journey really requires courage, it requires vision, and it does require commitment. We're now going to transition into something very, very exciting. I think the moderator did allude to it. We have seen Rwanda's commitment to driving this transformation, and we are now really going to witness something crucial. We're going to witness the signing and the establishment and sustaining of the Rwanda AI Scaling Hub. I'm very excited for this. We're going to witness the signing of a groundbreaking memorandum of understanding between the government of Rwanda, represented by the Ministry of ICT and Innovation, and the Gates Foundation. We will, right after, we'll get to hear remarks, we'll get to understand more about it. At this juncture, I want you to help me welcome Honorable Paula Ingabire, Minister of ICT and Innovation here in Rwanda. Let's give her a warm round of applause. We're also going to invite Trevor Mondal, President for Global Health at Gates Foundation. Let's welcome him with a warm round of applause. So, ladies and gentlemen, we're going to really witness a historic moment as we really formalize a partnership that will shape the future of AI in Rwanda and beyond. That is the signing of an MOU establishing and sustaining the Rwanda AI Scaling Hub, something very, very crucial. Each and every one of us here in the room, we're bearing witness to something, greatness that will beginning here in Kigali, and it will be reflected across the African continent. Now, this partnership sets the stage for Rwanda's AI Scaling Hub, a visionary initiative that will be implemented through the Rwanda's Center for the Fourth Industrial Revolution. Amazing, amazing. A big, big round of applause. A big, big round of applause. That's Honorable Minister Paula Ngabire, Rwanda's Minister of ICT and Innovation, as well as a President for Global Health Gates Foundation. I'm now going to invite them to come here and just tell us more about what we have witnessed. Honorable Minister, Trevor.
Thank you very much, Fiona. Good morning, everyone. And thank you for joining us here today. We'll keep our remarks very brief. We're very excited about this partnership that we have with the Gates Foundation around the AI Scaling Hub. And this is designed to be a platform where we can scale proven AI use cases and solutions. We're starting with three sectors: healthcare, agriculture, and education. And for many of you that have followed the story of Rwanda, we've been a proof of concept country for very many years. And what we believe in is that we can be a place where you can test and scale your solutions. And so this partnership with the Gates Foundation allows us to pick those ideas that have been tested and proven effective and impactful, giving them an opportunity to scale, not just in Rwanda, but across the continent. And so we very much look forward to this partnership, and we invite all of you, because it's going to be a platform and a space where many partners can come together to scale these AI innovations. I thank you very much. And Trevor, thank you for being here with us today, and thank you for initiating this impactful initiative. Thank you.
Thank you very much, Minister Paula. So I'm delighted to sign this MOU with the government of Rwanda and C4AI on the AI Scaling Hub in Rwanda, but I'm actually also very relieved. And that's because during this week, the 100+ innovators that we brought to this meeting and the students at CMU that I met on Tuesday have been coming up to me and accosting me in the hallways and saying, I've worked really hard on a great idea I have for impact for AI, and what do I do next? I have the prototype, what do I do next? And now I can concretely refer them to the AI Scaling Hub here in Rwanda. But what happens next? So we've committed up to $7.5 million over the next 3 years as seed capital for the AI Scaling Hub over here. And we would like to do the same, actually, in 3 other countries that we've identified over the next 12 months. So in Kenya, Nigeria, and Senegal. But I must congratulate the government of Rwanda and Minister Paula on being the first mover in such a scaling hub. And if you know the minister, then you would say that's not a surprise. Thank you.
Thank you so much. Let's give it another round of applause, taking bold steps, bold actions. We're now going to transition to a brief coffee break, and we'll meet back here for the next session that will be on infrastructure. We'll be looking at barriers to adoption and building blocks for the future. Looking forward to seeing you all back here by 11 a.m. Thank you all.
She just wants to be beautiful, she goes